Hey, welcome to our series on the One Big Beautiful Bill Act, where we're going through the most impactful code sections that we expect to kind of change what you've been seeing on your tax return. And here we're going to talk about the increased standard deduction. And I got to tell you, personally, I'm not a fan of this, and that's really for selfish reasons because the numbers were finally round and memorable for us, and now they're not.
Yeah. Since we got the standard deductions back in 2024, we've been saying like, I'm excited it's going to be 30,000, 15,000.
Yeah. They were numbers that I could rattle off
Uh-huh.
instead of saying 30,000 it. No, it was exactly 30,000, and this screwed the whole thing. So we're just kidding. This is really good stuff because we expect this to have a pretty good impact on client returns to decrease their tax liability for the most part for standard deductions.
Yeah, so with the increase in deduction, the actual tax rate tables were not changed at all. So same tax rate tables, now you get an additional $1,500 or $750, depending your filing status, um, decrease to arrive at your taxable income. So you should all see a lower tax, unless you itemize, in which you would have already had the itemized deduction higher than the standard deduction.
Yeah, I don't expect there to be a ton of folks that were like right borderline on itemizing, and then now this slight increase will put them back into the standard deduction. And a lot of people think like, hey, I no longer itemize. This isn't a good thing. It's not a bad thing to use the standard deduction. It's the deduction that everybody gets. And I know you and I have looked at some research and some data from the IRS that when you itemize, it does technically increase your chances of getting audited, at least statistically speaking, we see in the data. So I don't see that itemizing is a bad thing for a lot of folks. And this is just kind of extra help for them along the way.
Yeah, and when I see clients that maybe don't get to itemize anymore that used to, I just try to tell them, you want to take the higher of the two numbers, and whatever gives you the lowest tax is the one you want to take.
Yeah, so if we go back to like 2016, right, could jump in our time machine, go to 2016, the standard deduction was right around $12,000 for married filing joint. And if we were to add up state taxes and interest that you pay on your mortgage and some charitable contributions, and maybe you buy steel toe boots for work, I could get a lot of clients between 12 and like $16,000. That was fairly easy for us to get to. And then when the Tax Cuts and Jobs Act came in 2017, it doubled the standard deduction up to
Mhm.
$24,000. So we saw just a complete drop off the table of folks that typically itemize that now they're taking the standard deduction. And I think that trend continues.
Yeah, I agree. And it's going to continue to increase for adjustment or inflation every year, so it's going to only go up from 31,500.
It can only go up, and I've never seen it come down, although I think technically it can,
Yeah.
which will be interesting. So keep track of your itemized expenses. We tell our clients all the time, I would rather go through your receipts to see just in case you have enough itemized deductions to get over that hurdle. There's some tactics that you can utilize to one that we call bunching. And with bunching, if you want to talk through that a little bit.
Yeah. So when you're bunching, you might pay some of your property taxes in advance or try to hold off or pay some of your medical expenses that you might be making monthly payments on, try to pay them off earlier so that you get more of those expenses in 1 year, or hold off and try to bunch them all into the next year when you think you might have a higher chance of itemizing.
Yeah, I had a client that she every year loved to write a big check to her church right around the holiday season in mid-December. And the selfish tax advice that I gave her was, well, let's bunch these together. And instead of writing that check in December, why don't you write it in the first couple of weeks of January? And she knew that she was going to make that same donation again that subsequent December. So we were able to take 1 year and bunch those charitable contributions in 1 year, which ended up being a pretty good strategy for her. So there are some tactics that you can use if your goal is to itemize and take advantage of those. But Now with these continually to be increased standard deductions, I would expect a lot of folks to just take the standard deduction.
Yeah, I mean, it's still a high deduction, so
High
it's worth
deductions.
taking.
Absolutely. So that is the standard deduction increase. Good stuff. Thanks for watching. Your dirty player